What's next for 2018? Well, an improving economy, recovering consumer sentiment and better corporate earnings will help support the ringgit and the stock market next year. But experts say interest rate hikes and the impending general election will dictate the direction financial markets take.
But what we have seen over the past 3 years is a rather slow retail and consumer demand that appears to be picking up. We have a lot of indications that money is circulating faster. Banks are seeing a recovery in corporate lending, working capital lending. We're seeing a pickup in private investment. The economic transformation plan has given a lot of opportunities for the private sector to invest, and they're taking up the baton from the government. So I do think that we should have a recovery in consumer demand. We should have a lot of new infrastructure developments being built. 9 to 10% growth in the Kuala Lumpur Composite Index. So, you know, where are we now? Around about 1,715. I think we can get to 1,900, something like that.
The number of rate hikes by the US Federal Reserve and investor sentiment in the run-up to the general election will have an impact on the ringgit's movement.
Our chief economist's view is expecting a potential single OPR hike in the middle of the year, as early as May, potentially, and that could actually help support the ringgit to some extent as well. And other than that, I mean, the basic underlying factors, Malaysia's domestic demand, consumption, investment potentially could actually pick up next year as well.
And at the moment, investors' consensus is for another 1% or 4 25 basis point increases in interest rates in the United States over the next 12 months. If that's the case, then Malaysia's interest rate differential, which is, you know, something like 2.5% at the moment, will narrow to 1.5%, which could put pressure on the ringgit unless interest rates are raised here. I think Bank Negara will be reluctant to do so.
Based on past trends, the ringgit usually strengthens prior to the general election and then weakens after the election.
But into first quarter of next year, especially in the run-up to the general elections, hopefully it's earlier, we will actually probably see the ringgit actually strengthening. Based on past history, 2008-2013, typically the ringgit strengthens almost 12 weeks before the elections itself. It has come up about 6% on average. We're seeing the currency on average coming out at about 4 to 405 levels on average for 2018, probably ending next year slightly below 4, or sub 4, at about 3.95 ringgit.
I think the ringgit is worth 3.5 to the US dollar. I think that people have been sort of scared off speculating on the ringgit, and they're scared of the outcome of the elections. If they weren't scared of the outcome of the elections, or scared that there's going to be some uncertainty surrounding the elections, then the ringgit would be at 3.5. I just think that of all the currencies in Southeast Asia and the state of health of the economy, there's the biggest mismatch here in Malaysia.
I would say I think we've seen a large part of the outflows already happening before, and what we're seeing now is actually the real true longer term investors so far this year. So the upside for further outflows I think is limited in my sense at the moment. Further outflows like what we saw in 2015, early 2016. So I think a lot of those type of short money, hot money investors are actually lower than it was at this current juncture compared to it was 1.5 to 2 years ago. So we want to gradually see cold flows meaning a bit more longer term, direct investment,